Hello and welcome to another edition of Accenture's Insurance News Analysis with me, Natalie Freitas, and Kenneth Saldanha, Accenture's Global Insurance Lead, where we'll be discussing the biggest insurance news this month. And this month there's been some big acquisition news. We've heard that Allstate will acquire rival insurer National General for $4 billion. Kenneth, I really like to get your view on what you made of this deal. Do you expect to see more M&A in the market? And what does this tell us about the demand for human advisors?
Yeah, Natalie, good to be back with you. I absolutely think there's going to be a continued activity around the M&A space for insurance. There's always a little bit of an ongoing hum of insurance. Very often it doesn't quite make the news because there's always some degree of consolidation that's happening either with the insurers or with the distribution space. But then every now and then you do see some of the big announcements and the big deals, like the Allstate National General deal. This represents for Allstate, if I look at the industry as a whole, we do see this continuing trend towards consolidation in the personal lines industry for the US, for example. The top 10 carriers now hold almost 70% market share, and they're consistently picking up smaller regional and smaller carriers as they go. National General for Allstate is a little bit interesting because it actually represents a different customer segment that they're going into. Allstate is very much a standard lines insurer, which means it has a preferred customer base or an average customer base. National General does have access to what is called non-standard auto, which is a lower customer base from a higher risk perspective, and in some cases lower premium, but it's a very substantive part of the market. And so with this deal, we're really seeing Allstate continue both that overall trend of the largest carriers consolidating share, as well as for Allstate in particular with this deal, really expanding the nature of customer segments they're going after. So definitely an interesting acquisition for Allstate. And we've got another big one in the pipeline right now that has been announced. It's going through approvals. In the distribution space, we have the Aon Willis Tower Watson deal. That is really sort of two of the three largest distribution sources for insurance out there right now. It's a global deal and one that the regulators are going to look at very closely given the share of market those two companies have today. So certainly an interesting couple of big announcements against an ongoing hum of consolidation for the insurance industry.
Looking forward to hearing more as we see the market shake up. Reuters have reported this month that as insurers face hefty pandemic losses, new insurtech ventures will arise as well as new insurance lines. We know that insurers are waiting on the outcomes of legal rulings on whether they'll have to cover COVID-19 related claims. Given the expected impact on losses, will we really see insurers develop new ways of creating revenue?
I think absolutely. While there is definitely a sense of having to see how things play out with COVID, whether it's on the what will be covered in losses or even just figuring out how to work in this remote environment, there's no question that the industry is going to continue to seek out growth wherever it can. And I think we're going to see all flavors of that growth. Certainly in the existing products, there's going to be a strong push. I mean, COVID did create some awareness and some willingness to start changing revenue base in existing products. Two easy examples. We all probably, most of us who follow the industry heard about, Wimbledon's fairly large payout when it actually had to cancel the event this year. So event cancellation, which was viewed as a very rare esoteric product, has certainly been catching on as people. Wimbledon got a lot of positive press for having carried that insurance and being able to reimburse the costs of that event this year, but also just the general hardening of rates. There's a recognition that premium prices are going to go up in commercial insurance for property, which is something that insurers will definitely be looking at as they look at the potential of increased losses. The commensurate premium increase will certainly be a top line benefit to them as well.
With InsurTech in focus, and last month we talked about Lemonade, this month Claim Genius, a startup in instant vehicle damage assessment solutions using AI, they've announced $5.5 million in funding after a successful year last year too. What do we think about AI-led claims and greater use of IoT to assess accidents? Are they really any closer to reality?
Nadia, I mean, I think that's happening today. Right? I think it is reality today. I think we're absolutely seeing IoT and AI in evaluations happening in multiple carriers and in multiple markets right now. Most carriers are now using data from a driver's cell phone to really track what's happened in an accident, to get a lot of data around trajectories and speed and sudden braking. I think many of us have probably installed these apps a long time ago for discounts that carriers were providing, but they're fundamentally using that telematics data to really track what's happening based on IoT devices. Also, in the space of AI, the whole effort to create evaluations of damage based on photographs has been a bit of an arms race with a number of different startups and even some established auto damage companies racing to come up with a great solution there. It does actually elevate two other sort of ancillary topics around this, the first being a fairly fundamental change in customer experience, where most carriers now are asking their insureds in the event of an accident or a claim to actually start providing photographs and to take photographs of their from their devices. They'll provide the sort of framing of the photograph and ask the customers to actually take those photographs and send them in. A very different digital interaction, a very different mode of actually gathering information on a claim, which has always been a very difficult situation. As you can imagine, it's an emotionally fraught time, and asking a customer to give you a lot of information and going through a long phone script, not the greatest of customer experiences. In this situation now, we're using prompts of digital devices to say, can you take a few quick photographs and send them in? You don't need to talk to anyone. You don't need to spend hours on the phone, and it makes a real difference to what's happening on the experience side. There's still a ways to go. We recognize that there's still a long way to go with AI and on getting to those instant damage assessments. Quite frankly, you actually have some of the complication is there's so many sensors in vehicles today. Part of this whole IoT and telematics drive has increased a lot of the complexity of trying to assess damage just from a photograph. You can't tell quite what's happened to all the embedded electronics and sensors in a car from an external photograph. And so, while there's a lot of activity and a lot of current capability in this space, I would also say there's a long way to go still to get to those accurate estimates based on just the complexity of what we're asking the AI to do based on external photographs of what is eventually becoming an increasingly complex machine.
Kenneth, I saw in your last blog post you referenced the next story I want to talk about. Reinsurer Swiss Re said the COVID-19 pandemic has switched cyber cover from being a luxury purchase to a must-have. You talk about accelerating demand for cyber and more e-commerce activity, particularly among small businesses. What can you tell us about the potential ways insurers can meet this increase in demand for cyber cover?
I think, Natalie, this is one that you don't really have to go to the news to see how this is playing out for insurers. I think almost everyone is experiencing this in everyday life, right? So just to pick a few examples of this, I think there's, so many of us who are working from home and all of a sudden we're very familiar with conducting business over our home Wi-Fi networks. If you just think about the generalization of that, and the degree to which we now have business activity being conducted on home networks. I'm sure someone, as most people do, who has their router set to password as the password. They don't have any admin protection on it. That's now being used to actually conduct business. So the threat surface for cyber attack has just multiplied in terms of people working from home and conducting business from home. Right? Another example is stores or local shops that you probably shop at that were never really e-commerce shops, right, have now all of a sudden started to do online services and sales. So, even your local store that you always would walk down the street to go to now is doing things remote. So, and we see that in the volumes as you look at small businesses or all businesses really accelerating their use of e-commerce. So there's another example where the situation right now with the pandemic and the restrictions have really multiplied e-commerce and expanded the organizations that are now using that as an important channel. And again, when you do that, you need to look at cyber. And then finally, the third example is all of the remote sales and prospecting. I think there's actually, for those, especially in insurance, who actually work with agents as an example, but any business that has actually typically done more face-to-face interaction and now has to conduct that over the phone, call centers with remote workers, again, just an expansion of the threat levels and expansion of the need for cyber to cover all those kinds of new operations. So, I think everyone has, most people probably don't think of this in terms of what that means for insurance, but, everyday life has changed so fundamentally, and with it, so does insurance, right? And I think everyone's experience actually can reflect, if you sort of step back and say, what's the kind of insurance that now has to cover this event? There's absolutely a whole new raft of products and services that insurers are putting out in the market to defend that.
Kenneth, fascinating stuff. Thank you very much for your insights.
Absolutely. Good to talk to you, Natalie. Take care.
Thank you.